Okay, time to get our crypto on, folks. We're diving into, well, I guess you could call it the Bitcoin abyss today.
Oh, yeah.
Big drop below 100,000.
Big one.
Now we've seen these dips before.
Right.
But this one
This one feels a little different.
this one feels a little different, doesn't
Yeah.
it? So we're going to be looking at Mlion's analysis to really figure out what's going on here, because this goes beyond just, the numbers themselves. This is like
absolutely.
bigger picture stuff.
This is, this really highlights how market psychology and like the wider global economy regulation, it all kind of comes together
Oh, yeah.
to shape what's happening in the crypto world.
Absolutely. So Mlion, right off the bat, just points out, how significant this drop is.
Yeah.
I mean, we're talking Bitcoin's down 4.45%,
Wow.
which, that's over $97,000.
Yeah.
And you want to hear a crazy number?
Let's hit me.
Over $50.5 billion in trading volume
Wow.
in a single day.
Yeah.
So it's this isn't just
Right.
a little.
This isn't a blip.
No.
A blip. This
is a wave, and that kind of volume tells us something. It tells us that there's a real shift in sentiment here.
Right.
And it's not just those kind of like day traders, reacting to the short-term movements.
Right.
You have bigger players making moves based on probably some concerns about where the economy's headed.
Yeah, and it's not just Bitcoin. We're seeing
Right.
Ethereum's down even more than that.
Oh, yeah.
And there have been just massive, massive liquidations across the entire
Across the board.
crypto market. I mean, this is
Yeah.
painting a pretty intense.
It's a little scary. We're looking at, I think, what a lot of people call a risk-off scenario.
Mm-hmm.
So basically, when the world economy looks a little shaky, investors, they kind of pull back
Right.
from these assets that are seen as riskier, right?
Right.
And crypto, let's be honest, it's still pretty new. Right.
Compared to the traditional markets. And it hasn't really proven itself as that safe haven, that digital gold
Right.
when things get economically stressful.
So are we talking like potential domino effect here?
Potentially?
Yeah.
I mean, think about it. We've got rising inflation. We've got, whispers or maybe shouts of recession
Right.
in some major economies. You've got geopolitical instability all over the place. It's just a recipe for fear, for uncertainty, for investors to say, you know what, I'm going to take my money
Right.
and put it somewhere that feels a little bit safer.
And Mlion points out another kind of key piece in this whole puzzle: regulations.
Yes.
The EU is getting ready to implement these MiCA regulations. The G7's even starting to get involved.
Now, regulations, in and of themselves,
Right.
not necessarily a bad thing. Actually, sometimes, clear, well-defined regulations can actually boost confidence in a market.
Right.
But right now, what we're seeing is it's creating a lot of uncertainty. A lot of these details of these regulations, they're still being worked out. And that unknown that's what's causing some investors to hesitate, to hold back a little bit.
No, so it's not even necessarily the rules themselves. It's just that we don't know what the rules are going to be.
Right.
And that's spooking people.
Exactly. And that feeds right into this idea of what Mlion calls the short-term holder exodus, right?
Right.
So these are investors who, got in more recently, maybe got caught up in the hype, in the rapid price increases we saw. And now, faced with uncertainty and potential losses, they're heading for the exits.
Right.
They're selling, and that just adds to the downward pressure
Right.
on the price.
So it's kind of like a self-fulfilling prophecy.
Yeah.
The fear of the dip is actually
Absolutely
contributing.
You're absolutely right. And of course, we can't forget about the big elephant in the room here, the
Right.
Federal Reserve. What they do with interest rates, quantitative tightening. It has a ripple effect across all markets.
Oh, yeah.
Crypto included.
So for those of us who may not be like economics wizards, could we just break down, like, how are the Fed's policies, like, how's that playing into all of this?
Sure. So the Fed, they've been raising interest rates, right?
Right.
To try to combat inflation. But what that does, it makes it more expensive to borrow money,
Right.
which can slow down economic growth.
Right.
And it can make those riskier assets like Bitcoin a little bit less attractive to investors. Then you've got quantitative tightening, which is basically the Fed reducing their balance sheet.
Right.
So they're pulling money out of the system,
Right.
which again, it can further decrease the availability of capital out
Right.
there and make investors even more cautious.
So basically, we put all this together. The global economy is kind of shaky.
Right.
We've got these regulations. We don't know
True, uncertain.
what they're going to look like.
Uncertain. Exactly.
The Fed is kind of tightening things up.
Yeah.
Investors are getting spooked.
Right.
I mean, it really does kind of create a pretty compelling case for why Bitcoin is having this bearish turn.
I think so. So. This is not a drop happening in a vacuum. It's the culmination of a lot of different forces, all kind of pointing to the same direction.
Right.
And it could mean that we're in for a period of some pretty big price swings and maybe even some weakness that lasts a little while.
It really does make you think if Bitcoin is so easily, pushed around by all these external forces, can it really be this digital gold safe haven asset that a lot of people think it is?
That is the million-dollar question, isn't it?
Yeah.
Something for all of us to think about as we try to navigate what's happening in the crypto world.
Absolutely. Lots to ponder.
Yeah.
Thanks for breaking this down.
Sure.
This has been a really interesting deep dive.
Yeah.
And
Always fun.
we'll be back soon
Definitely.
with another deep dive, so stay tuned.
Looking forward to it.
All right.
Cheers. See ya.